alternative minimum tax. So because it impacts so few people, we're not going to spend a tremendous amount of time. As it stands right now, if you're a single person, you'd probably need to be earning over $500,000 to be subject to this tax. If you are a couple, you would need to be earning over $1 million to be subject to this tax. But that could change because those thresholds are basically a result of the Tax Cut and Jobs Act that was instituted in the initial Trump administration. And those tax policies are due to sunset or expire at the end of 2025. And if they go back anywhere to the levels where they were before, you're now talking about a single person who around $250,000 would need to worry about this tax, and a couple around $350,000, $400,000, which is why we're talking about it. Because if they don't extend the current thresholds, you're now bringing a lot more potential people into the fold that could be subject to this tax. But the alternative minimum tax is a parallel tax code that runs alongside the traditional federal income tax code that we've been discussing. And essentially what happens is every single year, they will calculate the taxes that you would owe under the alternative minimum tax versus what you owe on a regular federal income tax, and you have to pay the higher of the two. Now, again, right now, for the overwhelming majority of people, you're going to owe more on the regular tax code. So AMT is not a consideration. But if that's not extended, this could be a tax that's a much bigger deal for the high income taxpayer in the years that are to come.